Hi everybody and welcome to Forex Business University. This is the intermediate class. My name is Irian Swart and I'll be your lecturer for this lesson. This video is lesson number 17 and in this lesson we'll discuss the Commodity Channel Index. So here's what you'll learn in this lesson. You'll learn the history of this indicator, how to use this indicator, and how to combine it with other indicators. So let's move over to the charts. The Commodity Channel Index indicator is also known as the CCI indicator and was developed by Donald Lambert. The CCI indicator comes with two levels. It comes with a plus 100 level and a minus 100 level. Most of the times this indicator will move in between the plus 100 and the minus 100 levels and will exceed these levels for about 20 to 25% of the time. So let's first get the indicator on our chart so I can show you what it looks like. So this indicator is under trend indicators. Here you can also set the period for the indicator. This will also depend on what time frame you're trading. And here you can see is the levels, the minus 100 level and the plus 100 level. And as you can see, the CCI indicator consists of only one line. So much like oscillators, if this indicator moves over the 100 area or below the minus 100 area, this indicator is considered to be overbought or oversold. But this indicator is not under oscillators because it's a bit different than oscillators. This indicator has three main uses. The first use is overbought and oversold areas. So similar to the stochastics and RSI, the CCI can be used as an oscillator in this regard. And you can even plot in two extra levels to really see overbought and oversold zones. These two levels are the plus 200 and the minus 200. So let's get them on here. So you can see here's the positive 200, the plus 200, and at the bottom is the minus 200. So this is also levels you can watch out for overbought and oversold zones. Because this indicator is not as accurate as, let's say, the other oscillators like the RSI or the stochastics, we put in these extra zones to make sure that the price is in overbought or oversold zone. This can also depend on what time frame trader you are and what kind of trader you are. So for now we're not going to use these lines, but it's also good to know that you can use these lines if you want to identify real extreme overbought or oversold areas. For instance, example, you can see here the indicator did go over the 200 extreme and we saw a reversal. Same thing happened right in here and we also saw a reversal. Then the second use for the CCI indicator is to determine breakouts. Similar as the RSI we did in previous lessons, this indicator can also be used by drawing trend lines and then waiting for the price to break the trend line before entering the market. So first of all, we want to see the CCI indicator going into an extreme overbought oversold area past the 100 or the minus 100. And then we're going to use this trend line to connect the lower swing highs or the higher swing lows depending on what trend you are in. And then we're going to wait for the break of that trend line to enter the market. So similar to the RSI, let's take this low right here. We had a low here. We had price coming up and making, or the CCI indicator rather, moving up and making higher swing lows. So we're going to connect these. And very simple, we're going to wait for a break of this trend line which happened right in here, and then after we have the break to the downside, we're going to sell at this candle down. The same is true for a buy. We're going to identify a swing high over the overbought, and then we're going to connect the lower swing highs like here. And we had the break here, so we're just going to wait for the CCI to move out of the oversold zone, which was right here. And right here we can also place an order and long the market. So the CCI can also be used in this way for breakouts. Then the third use of the CCI indicator is probably the most popular use, and that is to determine exact buy or sell signals, and that is in a trend. So whenever you see the CCI moving above the plus 100 level, you are in fact in a period of strong uptrend, and this is the time you can enter a long trade, a buy trade. And once the CCI moves back to the plus 100 level, you should then exit your trade. However, when you see the CCI moving below the minus 100 level, you are in a strong downtrend period, and you can enter a short trade. Similar to the long trade, you should exit your trade once the CCI moves over the minus 100 level again. So as you can see, when price moves over the overbought zones, the minus 100 and the plus 100, this doesn't necessarily mean we can expect a turnaround, a reversal, as would you expect in a normal oscillator like the stochastics or the RSI. In fact, this is a sign that we are in an upwards trend and we can, or downwards trend, and we can expect the move to continue. Now, of course, this can be effective only with other indicators also indicating the trend. So the indicator that I love using with the CCI indicator is of course the moving average, and I like to use the 21 moving average. So let's get that on the charts. So how I would like to use this indicator is I would like to see price breaking this 21 EMA, then retracing back to it, and then we're going to wait for the CCI indicator to go into an oversold area because we are in a downtrend. For example, right here, we had price moving here and then broke the 21 to the downside. This is indication we are in a downtrend. We're going to wait for the price to come back up and tag this area, which happened right in here. Now we're going to wait for the CCI to move into the oversold zone. Here we had the CCI on the tag moving in the overbought, which was even better. So we could only have waited for the CCI to have crossed back across the 100 area, which happened right here on this candle, and then we could have sold it. But we want to make sure we are in a good strong trend, so we're going to wait for the CCI to cross into the oversold area. And right here on this candle, the CCI crossed into the oversold on this candle, and here we could have then placed our order and sold this move down. The same is true when we're going up in the uptrend. We had the price breaking the 21 here. We're going to wait for a retracement, which happened right in here. It tagged the 21. So we want to see now the CCI moving into the overbought zone, and then we're going to buy even further. Right on this candle, the CCI moved into the overbought zone above the 100. So on this candle, we could have buy the market. We had a retracement again, tagged the 21 here once again. Once again, we're going to wait for the indicator to move into the overbought zone, which happened right on this candle. This is another signal that we could go long in this trend. A retracement once again here. So going to wait for the CCI to cross into the overbought zone, which happened on this candle. Another signal to go long. So as you can see, a very effective little method of using when trading in a trending situation, and buying if the indicator goes into the overbought, or selling if the indicator goes into the oversold zone. So like always, I urge you to test this indicator out with other indicators as well. Also test it out with different periods, and also test it out on different time frames. This is a great little indicator because it has so much uses. Can determine the trend, it can also determine breakouts and certain exact entries in overbought and oversold zones. So test out all those aspects of this indicator and see which one you like best. So let's recap. Here's what you've learned in this lesson. You've learned the history of this indicator, you've learned how to use this indicator, and how to combine it with other indicators. And please remember, If you have any questions regarding this lesson, you can contact us on either Skype or leave us an email at support@forexbusinessuniversity.com, or use the Students Forum to post your question there. We prefer that you use the Students Forum because you can also post your chart there and you might help other students that might have a similar question. So thank you very much for watching this lesson, and I hope to see you in the next one.